Hey everybody, my name is Jesse Morales, and today we're talking about Solana. Solana is a blockchain project that provides a fast, secure, and scalable platform for decentralized apps and decentralized marketplaces. The project was founded in 2017 by Anatoly Yakovenko, an ex-Qualcomm and Dropbox software engineer with extensive experience in compression algorithms. Compression algorithms are essentially a method to make files more portable, which is important when attempting to build a system to go as fast as it can. Yakovenko and team implemented that framework to create a system that can currently handle 50,000 transactions per second and 400 millisecond block times. After reading the white paper, you get the sense that the team's main focus is transaction speed, low transaction cost, and a network that can handle high throughput. The team is confident that as this network grows, the system can handle up to 710 transactions per second, putting them well ahead of any of the leading cryptocurrencies in terms of transactions per second and block creation time. There are currently many projects that are taking advantage of the speed of the network, predominantly decentralized finance, but also decentralized exchanges, wallets, applications, gaming, and much more. Here are some examples of projects that are currently using the Solana network. The number of developers that are building apps on the network is increasing, which is good for the system as it gets tested for its scalability, its security, and its ability to handle the high throughput, which is vital for the success of the Solana project. Since present value of cash flow doesn't explain the price of the Solana token, I use another method that has been adopted in the cryptocurrency sphere, which considers the amount of projects being built on a network and the locked value that these projects have. But first, let's take a look at the market cap of the Solana project and the price of the SOL, which is the native token on the Solana network. Earlier this year, market cap and price of the token rose significantly in about 6 months. Market cap went from 70 million with a price of the token at $1.31 and trading volume at 16 million to a market cap of 11.1 billion, token price of $47.66, and a trading volume of 1.5 billion. Now, in this time, many cryptocurrencies saw a similar run without much to really justify the gain of almost 12 times the market cap, which only strengthens the criticism of a market bubble. So this is how I valued the Solana project. As cash flow wasn't an appropriate measure, I use a method that has been widely adopted in this market, and that is the total value locked. Total value locked is an attempt to measure the real value locked within a protocol of the Solana network. The way it works is it looks at projects being built on the platform and basically totals the value of the projects on the network. Currently, the value locked in Solana using TVL is around 1.6 billion, with Radium and Serum contributing a large part of that value locked. Radium and Serum are decentralized exchanges, and the way that total value locked works in those protocols is that it calculates the amount of assets that are locked within the smart contracts on that network. The projects built on the network create demand for Solana's native token, the SOL. The SOL is used to operate Solana's blockchain. So as more projects are built on the network, more demand is created for the SOL token, which would begin to justify the current price of the token. Total value locked is a reasonable risk measure of how much the market is willing to bet on a given protocol. It determines the confidence level of users of the protocol and shows the direction of investors' interest. It also indicates the market share of verifying DeFi protocols against each other. The higher the TVL, the higher the investor's confidence in the protocol. However, it should be worth noting that TVL can be volatile as it depends on the staked token's prices. Something else to consider is annual percentage yield. APY refers to the staked returns as a percentage over a year. APY is a way for projects to offer incentives for people to stake money in their protocol. Sometimes this can also be used to determine whether a project should be expecting high inflation rates. Most of this analysis begins by understanding the tokenomics of a given protocol, which essentially means how many coins are in circulation, how many are yet to be released, and how the project plans to disperse the remaining tokens. Like many other forms of the economy, projects need the injection of that initial capital to build their network. It takes a long time to grow a network organically, and it doesn't really create much entry points for traditional investments, which led the industry to adopt ICOs, which are initial coin offerings, which are very similar to VC investment and is a clever way to fund the protocol. The way they work is there is a pre-sale of a predetermined amount of tokens at a predetermined price. And basically, those who buy the tokens are just hoping that somebody pays more for the tokens that they acquired. With large amounts of capital, these projects really need to be efficient with the way that they are using those resources. It essentially leaves projects to play a game of catch up, to build value on their community, to justify the price of their tokens. Should naturally self-correct when the hype dies down, and it will allow for responsible projects to lead the way and establish the norm. And here's a little bit about the fundraising history of Solana. The ICO raised 3.2 million and sold the tokens at 4 cents per token. Currently, the circulating supply is at 272,637,428 tokens, and the total supply is 494,519,162, which introduces a new metric, the fully diluted market cap, which considers the total supply of tokens multiplied by the current price of the token. And that would be at 20,133,214,934 dollars. And here is where I give my fair assessment of what I believe the Solana token or the market cap of the project should be, considering that total value locked is currently at 1.6 billion in this bull market, which is important to note because as prices of the tokens of the protocols that are built on the Solana network increase, so does total value locked. If there is a burst, then total value locked drops dramatically. Therefore, considering the 1.6 billion total value locked, considering the incentives that Solana provides in forms of grants for developers to build on their network and the increased amount of developers on the system, my valuation of the Solana network comes in at around $3 billion. And the assumptions that I'm making to add that extra 1.4 billion to the market cap is that there eventually would be some sort of emotional commitment to the growth of the network after the initial investment that is mostly fueled by speculation, and eventually people are convinced that it's a good investment. Adoption of the network, adoption of more developers, adoption of more people just understanding what this market is. Also, advocacy, further investment on technologies that are built on top of that network, which eventually would lead to more users of this network. My honest opinion is that it has a lot to do with computational power, trust of blockchain, but another attribute to consider is popularity. Popularity would attract more users, popularity would attract more investors, popularity would attract more developers to build on the network, um, which would play out with time. Just as Bitcoin took a while to gain tremendous popularity, Solana is in the infancy of its development. It it has the technology to be a blockchain that rivals Ethereum and can be worth the price that it's at right now. But only time will tell. Thank you for listening to my analysis. It really was more of an elaboration of certain topics I wanted to talk a little bit more about. So thank you for listening and good luck to you all.